So we have a problem here. I have got all the ratios here itself, okay, so that we could work out it easily. So in this problem, we'll start from the required. So this problem has not been asked in any exam or anything. It's from a book. So the question requires you calculate the following accounting ratios for the year: gross profit, operating profit, ROCE, asset turnover, current ratio, inventory days, receivable days, payable days, and gearing. Okay, so this is what it asks. So what we'll do, we'll, as and when we are going to do the sum, okay, whichever ratio is like applicable, we do it. Whichever is not applicable, we'll delete it and we'll move on. Okay, so what we'll do, we'll start from here. We'll start from gross profit, or else what we'll do, we'll first see which ratios we have to work out, so that we don't need to see the question again and again. Okay, gross profit we have to do, operating profit we have to do, net profit we don't have. So we have ROCE, then we have current ratio, we don't have liquid ratio. Then in activity ratio we have inventory days, receivable days, payable days, and asset turnover. So they require asset turnover, so we'll do that also. Then we have current ratio, I think we have already done it. Payables, gearing. Okay, so conversion also we leave it. We have gearing, so this is what gearing is. We do not have coverage ratios and all, so we'll remove that. So these are the only ratios that we have to compute. So we'll compute it and we could move on. Okay, so we'll start. We have to get the gross profit. Is gross profit available? Yes. So if you see here, the revenue minus cost of goods sold, that is gross profit. Okay, so if you are going to do any extra step, we will so gross profit equals to okay minus COGS minus any direct expense, right? So that means if you take gross profit, sales is 975 minus 510 is the cost of goods sold, okay. So gross profit comes to 465. I think we can compute here. So it is 465 divided by 975, okay, into 100. Let's get the answer. So answer is 47.6, and that's a percentage. Okay, so why didn't we take the overheads? See, overheads is an indirect expense, so we should not take indirect expenses here. Okay, so that's why we have not taken it. So next we'll move on to operating profit. So operating profit is not directly available, so what we could do is we can take the gross profit. From that we can deduct the indirect expenses. If we deduct, we'll get the operating profit. So we'll find out that. So operating profit would be from gross profit. Gross profit is 465. From there we will minus the 384. So we will get the answer. So operating profit is 81. So 81 is the answer. So let's get the answer here. So we got 8.33 as the answer here. So from gross profit we deducted the overheads. Okay, so we got the answer as 81 and we have found out this. So let's go to the next one. So the question has asked for ROCE also, right? The question has asked for ROCE also. So we have computed the operating profit, so that won't be a problem. But capital employed we have to find out. So to find out capital employed, there are two ways. Find out the total assets, right? So the total assets here is 586 minus the current liabilities. Okay, current liabilities are all these three items. Okay, how do we know that these are three items? See, it is tax accounts payable. Okay, income tax is also a current liability, and also dividend payable is a current liability. Interest bearing borrowings is a long term liability. Okay, so you can compute in two ways. So both ways we will compute so that you will get the idea. Okay, we'll compute it in both ways. So we'll find out in this manner. Total assets is 586 minus current liabilities is, we have a list itself, 82 plus 24 plus 20. All these things are current liabilities. So when we solve it, we get 460. So we can also find out it in terms of this formula. So we'll just try to find it out. So the other way to find out is, we'll find it out here. Equity capital. So equity capital is 140. So we have it here. Plus the, see, we have to, equity capital always refers to equity capital plus the reserve also. If we have any preference shares, we can add that, or we can add the long-term debt. This is a long-term debt. Okay, so interest bearing borrowings, so that would be long-term debt. So that is 250. So put together, so either way you compute, it will give you the same answer. See, however you do, it will give you the same answer, 460. Okay, either one of the method you can do, whichever is easiest you do it, you will get the answer. So let's get the answer here. Operating profit is 81 that we found out earlier, and 460 are capital employed. This should be expressed in a percentage. So our number would be 17%. Okay, so now we'll start with the liquidity ratio. So liquidity ratios, it's going to be current ratio. So we'll be looking at current asset by current liability. So first we'll get the current assets. So current asset is going to include the inventory, so 127, plus the trade receivables 108, and the cash. And current liabilities is going to include, I think we have already found out current liabilities here, so we'll take the number from there. So we got the current asset and current liability. We'll work out the formula. 238 divided by 126. So the answer is expressed as is to 1. So that's a sum. It is 1.88 is to 1. That's about current ratio. Let's go to activity ratio. So the activity ratio requires these numbers. So we know what is the sales. Sales is 975 divided by total assets, total of all the assets. So total asset comes to 586. So the answer is in terms of times. Okay, so it is 1.6 times. So we'll start with inventory turnover ratio. So inventory turnover ratio requires cost of goods sold. So first we have to get that number. So cost of goods sold is directly there given. Okay, so for this sum it's like directly given. So we don't need to much worry about it. COGS is 510 divided by average inventory. So if there are 2 years given, then we have to take an average inventory. As there's a single year given, we can just take the inventory as given. Okay, so this will give us the answer in times. It's 4, and for this one it is going to be 365 divided by 4.015. So let's get the answer. So the answer is 90.9 days. So we'll go to the receivables. So in receivables we have credit sales, okay, but there is no credit sales is given. So what you can do is you can put a note, okay, assuming all sales to be credit sales. You can note it like that, and then we could do it. So sales is 975 divided by average debtors. So here if you see, we don't have the word debtors, but we have receivables, so that is 108. If the question gives you receivables as well as debtors, both the number, you have to add it. Okay, you shouldn't take an average, you should add it. In case there's a 2 years, okay, you have receivables for year 1 and year 2, you have to take an average of it. As we only have a single year, we can just take the full number here. So let's get the answer. So the answer comes to 40 days. So let's go to the payables. So in payables, if you see, there is credit purchase, but we do not have any credit purchase in this problem. So what we can do is we can make an assumption, assuming all COGS to be credit purchase. Okay, so COGS has been 510. Divided by average creditors. So creditors is payables So we have trade accounts payables. Okay, so that would be the creditors. So we'll take 82 and we'll solve it. So the answer is 6.21. So the number of days is 58 days. Okay, so let's go to the solvency ratio. So the solvency ratio is long-term debt divided by equity shareholders funds. Okay, so we'll as we don't have space, we'll put it here. Long-term debt is this number 250 divided by shareholders funds is 210. This is 140 plus 70. So if you want, I will put 140 plus 70 so that you will get the answer. So this answer is represented as is to 1. So it is 1.19 is to 1. Okay, so we have done the sum fully. We have done all the ratios also. So if you require, we can cut down the numbers after decimal. We can try to cut it down. Okay, so that it will look neat. So that's about this problem. So when you get a problem in ratio analysis, first see like what are the formulas required. Then if it's going to be in Excel, it's quite easy. Or else what you do is you first solve one by one. Okay, here we had set the format and then we solved it. If you're solving it in a paper, solve the formulas one by one. Start with gross profit margin, finish it, then go to operating profit, finish it, then keep on moving. Okay, as this is Excel, I have already put all the ratios and I could move them easily. I can add a row, I can delete a row, I can add a column. So that is flexibility I have. But for writing a exam on a paper, it's quite difficult. So ensure you get adopted to it.